right, all right. All right, so we're just waiting for Luminar to start their call. I'm pretty sure, from my understanding, I think that they just haven't started anywhere yet. So as soon as they start, we're ready to go over here. But should be interesting. Their software is going to be in all of our cars in the next 5 to 10 years, per my belief, at least. Um, so yeah, very very bullish on them. Except for their first public call. Who here's invested in them? Yeah, they're fashionably late. We'll see where they're at. I'm just looking on Twitter right now, see if we can find anything on here. If everyone else is having this issue too, make sure that we're not the ones who are late. But do not believe we are. I mean, while we're waiting, I mean, I'm scrolling, I'm not seeing anything on here. I'm waiting for an announcement from them too for this delay. It'll start as soon as they start. We're queued up, we're ready to go. I've been sitting here for 15 minutes now, so it will go. We just got to make sure that there's not anything else we need to do here. We did get some news this morning too. If you haven't seen, we are going to be providing, gosh, the Chinese giant. Which one are they? SOIC, I believe. Oh, it was a big deal too. We gapped up in the morning because of it. Here we go. I'm about to shut up. Auto Giant SAIC. We're gonna be having our software in there. All right, I'm shutting up now. Enjoy.
Good afternoon, ladies and gentlemen, and welcome to the Luminar Full Year 2020 Year in Review and 2021 Business Update Conference Call. With me today are Austin Russell, Chief Executive Officer, and Tom Fenimore, Chief Financial Officer. As a quick reminder, this call is being recorded, and you can find the earnings release and slides that accompany this call at luminartech.com/quarterlyreview. During the call, we may refer to our unaudited GAAP financials and non-GAAP measures in our release. I would like to remind everyone that comments on this conference call may include forward-looking statements regarding the company's expected operational and financial performance for future periods. These statements are based on the company's current expectations and are subject to the safe harbor statement for forward-looking statements that you'll find in today's news release. Actual results for future periods may differ materially from those expressed or implied by these forward-looking statements due to a number of risks or other factors that are described in our Form S-4 recently filed with the U.S. Securities and Exchange Commission. We are not undertaking any commitment to update these statements if conditions change. Now, I would like to turn the call over to Luminar's founder and Chief Executive Officer, Austin Russell.
Thank you, Michael, and good afternoon, everyone. Appreciate you all joining Luminar's first quarterly and full year review as a public company. Since founding Luminar in 2012, we from a product standpoint, for hardware, we launched and built our first unit of Iris, the series production version of our technology. Software, we kicked off productization of our software developments leading up to the Sentinel announcement for what we had in 2021, just last week here. From a customer standpoint, we accelerated customer adoption across key verticals, including passenger vehicle OEMs, trucking partners, and robotaxi programs, totaling to 50 partners. Won the industry's first commercial series production win for autonomy with Volvo. And then as well had two subsequent additional landmark wins with Daimler Truck and Mobileye. From a financial standpoint, as you all know, going public was one of the biggest events. It brought our total raised, to roughly about $850 million by year-end 2020. We originally set the target for an ambitious $1 billion forward-looking order book by year-end. But along the way, we actually increased guidance and subsequently met that as we crushed it, landing at about $1.3 billion. As everyone knows, 2020 was a tough year, but we certainly made the most of it and then some. Things have only accelerated in the few months we've had as a public company in 2021. Can share more on that. So first and foremost, our Iris deliverables are on schedule for the 2022 start of production. We've successfully executed day in and out to be able to meet our product milestones as we continue to industrialize our core technology in a series production product. And importantly, this is not our first rodeo building a LiDAR. You can't go from 0 to 100 right off the bat. You have to build multiple generations of LiDAR prototypes, LiDAR for vehicle testing, and LiDAR for development, and then finally LiDAR for series production in order for this to be truly successful in the industry. With these multiple previous generations of systems that we built, it has the same core LiDAR architecture and principle, but now we're approaching the end of that tunnel, leading up to series production, and that's how we've been able to pull this off. From a milestone standpoint, we've successfully completed engineering validation testing from our Iris B samples and are now progressing on to the final stages of B sample production before ultimately ramping into C sample stage later this year. The results of the rigorous testing have been very positive, and we can now say that Iris has passed key auto-grade environmental specifications. This includes shock and vibration, thermal, the ability to operate in extreme heat and cold conditions, as well as the ability to survive harsh weather conditions such as rainstorm with ingress protection. As a result of our team's hard work, we now have Iris LiDARs live on customer vehicles, going through the data collection and development process, and transitioning from our previous generation Hydra LiDAR. From a performance standpoint, our initial goal for Iris was to maintain some of the same performance of Hydra LiDAR, but this time in an auto-grade series production product. Hydra set the gold standard for performance in the industry as the first to meet these very stringent automotive performance specifications, like seeing out 250-meter range for hard-to-see dark objects, like 10% reflectivity, as well as very high resolution, camera-like in that sense, with customers now having already been testing on hundreds of these units today in preparation for their production programs. Interestingly, we found through real-world testing that Iris actually outperforms Hydra in a few dimensions, leading to even better ranging performance with a max range out to 500 meters, and even better ability to see dark objects clearly at 250 meters. Of course, Iris is also designed for high-volume manufacturability. In series production, is lower cost, and is smaller and easier to be able to integrate into vehicles. From a manufacturing point of view, we've successfully developed our Iris pilot line in our advanced manufacturing facility in Orlando, Florida. We've now defined the initial blueprint for how to be able to successfully and efficiently build Iris, working hand in hand with our Orlando engineering team to be able to optimize the process in a highly automated capacity. We selected a contract manufacturer and series production facility in Mexico. And the next major milestone that will take place is as we transfer our blueprints and ramp ultimately towards a C-sample production by the end of the year. Now, moving on to our transition to a full-stack autonomous vehicle company. Historically, people have thought of Luminar as a LiDAR company and the leader in LiDAR for production vehicles. But the introduction of our full-stack offering last week is hugely transformational to Luminar, moving from a LiDAR company to an autonomous vehicle company, moving from a component company to a solutions company. We call it Sentinel, which is the industry's first full-stack autonomous system for series production. It's a holistic system offering, includes perception software, controls and planning software, Iris, LiDAR, and other ecosystem components. We partnered closely with Zensact, a 550-person automotive software team, to be able to deliver some of the different components of Sentinel, with their responsibility primarily focused around the controls, planning, and decision-making software. Sentinel will enable automakers to offer highway autonomy and proactive safety capabilities on their production vehicles for the first time. For Luminar, all of this is key in our transformation, enabling autonomy and improved vehicle safety to become ubiquitous. Lastly, I want to cover some new details about customer adoption and accelerating traction, and looking ahead, our robust pipeline. At Luminar, our mission and focus has always been to deliver product for series production vehicles in direct partnership with OEMs. That's what led us to architect and build the product the way it is, and today, we remain the first and only LiDAR to really meet these specifications for autonomy in production. We're proud to share that we've welcomed 6 new partners since the start of the year. Now today, one of them now at the production stage, SAIC, the largest automaker in China and a Fortune Global 100 company, which is the lead series production automaker partner that we have in China to deliver this industry-leading LiDAR and associated software for SAIC's R brand vehicles. This win really kicks off Luminar's foray into China and also our APAC expansion. Importantly, we remain focused on a handful of key partners that we believe have the ability to see things through to series production as we work with the majority of these top OEMs. This is as opposed to trying to create a long list of customers testing products, but may or may not really lead to production opportunities. So we believe that winning just the handful of top automakers has the potential to deliver substantially more value than everyone else in the industry combined. That's why it's so important. Building these relationships early on has been critical from a product and timing perspective. And in the automotive world, specifically for production programs, you generally have to be working with OEMs years in advance designed into their development platforms. It's a very high barrier to entry, but equivalently a very high barrier to exit. We now have greater conviction than ever about the evolution of the industry and additional major program opportunities over the coming next couple of years, as these programs are working with transition from the advanced development stage into production. When it comes to these customer production programs, we've certainly been taking the market by storm. But they can be very intense and demanding, so keeping things on track is not a trivial exercise. With that said, a quick key program overview. We've been meeting our various milestones with Iris, B-sample deliverables to Volvo. We've met our deliverables to Daimler Trucks, Mobileye, Zenseact, and SAIC as well, which are all on track. Our deliverables in general to our development partner OEMs also remain generally on track. We're already off to an amazing start to 2021 and look forward to our best year ahead as we execute and win the industry. And with that, I'd like to hand it off to our CFO, Tom Fenimore.
Thank you, Austin. I will address 3 topics. As a management team, we are focused on financial performance milestones for us to achieve in 2021, and we'll use these milestones to measure our success for the year. Next, we will provide an update on our commercial pipeline and forward-looking order book. Finally, we will discuss our 2021 guidance and preliminary 2020 unaudited financial results. We are finalizing our 2020 audit and will file our 10-K with audited financial statements by the end of this month. I will now define our 5 2021 milestones that we expect to achieve by the end of the year. The first is execution against our Iris industrialization plan. Before the end of the year, we plan to complete key steps in testing, validation, and the manufacturing blueprint for Iris, while in parallel, executing tool up and bringing our series production CM partner online. This is expected to culminate in the production of C-sample Iris units at our CM partner before the end of the year. The second is to win at least 3 major commercial programs this year, one of which we already publicly announced earlier today. The third is software. We expect strong continued development of Sentinel, leading up to an alpha release at year's end. The fourth is to grow our forward-looking order book by at least 40% this year, and then our final milestone is to be disciplined in our cash spend and end 2021 with the same or slightly more cash than we had at the beginning of this year. More on that later. On to our commercial update. We have seen a significant increase in our commercial pipeline since our last update in November. We are currently working to convert an additional 14 programs to series production awards or equivalent by the end of 2022, up from 12 in November. We ended 2020 with a forward-looking order book slightly over $1.3 billion, a little better than the increased guidance we gave in November. As a reminder, our forward-looking order book represents the estimated future revenue over the life of program associated with our commercial wins. See the appendix in our earnings deck for a more detailed definition. Going forward, we expect to update our forward-looking order book annually, but likely not on a quarterly basis given the timing variability of program awards. Now, on to our final topic. In 2020, revenue was approximately $14 million. It is worth noting that there was nearly $1.5 million of customer billings in 2020 that during our year-end review process, we decided to defer and expect to recognize as revenue this year. For 2021, we expect revenue to be in the $25 to $30 million range, consistent with the $26 million in our August forecast. A quick comment on our unit cost structure. As a management team, we are focused on delivering solid unit economics, especially our bill of material or BOM at series production scale. Correspondingly, we don't believe our gross margin during the pre-production phase is a relevant metric for the longer-term profitability potential of our programs. We remain on track to achieve our $500 BOM target per unit for series production scale. I will now transition to discuss our operating expenses and CapEx. We expect both these line items to increase significantly in 2021, given the investments we need to make for our growth plan. For CapEx, we expect to spend approximately $10 to $15 million this year. After this year, we don't expect our OpEx or CapEx to grow anywhere near the rate that it has grown this year. For 2021, we expect total cash burn, defined as operating cash flow less CapEx, to be approximately $140 million. We raised nearly $154 million of cash from the exercise of warrants during the public warrant redemption process, which concluded on March 16th. This should help offset our cash burn this year and then some. We expect 2021 to be a peak year for our cash burn rate, and we believe we have sufficient cash on hand to reach profitability. On December 31st, 2020, we had 323.9 million shares of common stock outstanding, including the Class A and Class B shares. We attached a slide in the appendix with greater detail on the math behind this share count. I would like to conclude by thanking all the employees at Luminar for an amazing year in 2020. What our team was able to achieve in such challenging times was nothing short of miraculous. I'm truly honored to be a part of this team. With that, Michael, we're ready for Q&A.
Many thanks, Tom. As we start the question and answer portion, for those on the phone, please dial *1 to ask a question, and remember to mute your computer before asking the question on the phone. Over to you, operator.
Again, I would like to remind everyone, if you would like to ask a question, please press star then the number 1 on your telephone keypad in order for us to open your line for you to ask a question. Again, please press star then the number 1 on your telephone keypad in order for us to open your line and for you to ask a question. We'll pause for just a moment to compile the Q&A roster. We have a couple of lines here for question. Please state your first name before you ask your question. Your line is now open. Please state your first name and ask a question.
Good afternoon, everyone. This is Aileen Smith on from Bank of America. Can you hear me?
We can hear you.
Yep.
Great. First question on Sentinel, as there seems to be a lot of traction in short order with the Zenseact and Volvo announcement last week, and then SAIC this morning. As we think about the components in that suite being Luminar's LiDAR and perception software, and then Zenseact's OnePilot autonomous driving software, what has been the reception by automakers like SAIC or others that you're in discussion with to purchase a holistic autonomous system with software from another automaker? Or is there significant interest by automakers in purchasing the base hardware and perception software from you and integrating it with their own internally developed autonomous software?
Yep. That's a great question as it relates to that, and yeah, it's certainly exciting to already start to get some traction. Just following the announcement. And when it comes down to it, I think the whole problem that it's solving is that there's really only a handful of automakers that have the capability to develop a full stack system and with all of the different components that have to come into play to do this. From a software standpoint, that's really where, in addition to our own perception software and some of these other software components going into it, in addition to Zenseact software, we offer it as both a holistic solution, which is applicable to a number of automakers, but also in an a la carte capacity, to a stage where, many times you'll see automakers that are maybe developing or have capabilities to develop certain parts of the software stack, but not the whole thing holistically. And as a result, wouldn't be able to really make, or would be a huge challenge to make, a fully autonomous system for any kind of production vehicle, or frankly, any level of autonomy that's driver out of the loop. So that's what we've developed. That's what we're going out there with. And, we certainly expect continued traction across the board on that.
Great, that's helpful commentary. And second question, one encouraging sign, certainly relative to some of the other SPACs through reporting season, is the consistency of your 2021 outlook with some of the financial targets that you established last year, which I think speaks to how they may have been grounded much more so in reality than others. However, obviously you continue to execute better on converting programs to series production, which has obviously boosted the order book. Looking specifically at what was your target for, I think, EBITDA positive and perhaps free cash flow positive by 2024, has the better performance on business wins pulled forward or pushed out that target in any significant way versus your initial expectations?
Sure. So I'll make two comments here. First, the direct answer to your question is, as we look at our outlook and kind of the business that we've won and the business that we expect to win, we still anticipate profitability and cash flow positive somewhere in that 2024 plus or minus timeframe. So we haven't seen any material change in the outlook for there. The second thing, and I just wanted to highlight a point that you mentioned there. I think one of the things that differentiates us from some of the other LiDAR companies that have gone public is a lot more of our revenue base is less associated with selling sensors to testing and development fleets. A lot of our revenue is more associated with getting ready for our series production programs, and that's either via development revenue as we really get into the execution phase of launching series production, as well as selling sensors for either pre-production programs or late-stage development fleets. And so that demand tends to be more predictable. And I think one of the things that you saw last year, particularly in the COVID times, is a lot of these testing fleets, you'll probably see them around the street here in the Bay Area, wherever you are, that have those, big Lego type cars out there. A lot of those were grounded at a halt for COVID, and that really pushed sales to that sector and halted them for a good chunk of 2020. Luckily, that's not our business plan, and we weren't impacted as much as others.
Fantastic. That's great color. Thank you for taking the questions.
Our next question comes from the line of Tristan Guerra. Please go ahead.
Hi guys, good afternoon, and thanks for the slide deck, very useful. Just wanted to get a little bit additional color on your 1.3 billion revenue funnel. Should we assume about 1.3 million units and about the same number of cars, and is that mostly L4 applications?
Sure. So let me go in a little bit more cover of exactly what is in that 1.3 billion. And so that was as of December 31st, 2020. We look at the production programs that we won. So any 2021 not in number. That is our estimate of programs for the business month, the revenue that we expect, whether the hardware or the software. Now, the unit pricing depend, based on the timing, the size of the order, whether it's hardware only or whether it's hardware plus the different software functionality that we have. So in terms of going down into the breakout between volumes, pricings, units, et cetera, that's something that we're, not really, going to be going into that level of detail, but I think it is a good mix of, our two levels of product functionality, the highway autonomy feature, as well as the proactive safety feature. And it also is a good mix of hardware, as well as the software functionality that we have.
Okay, that's useful. And then looking at your SAIC engagement, is that the first one to ramp in volume, and should we make should we have the expectation that it's potentially the largest in the near term in terms of size within that funnel?
Yep. So this is running in parallel with the Volvo program here. These guys are certainly they're moving quick. There's no shortage of that for sure, and they're very intent on seeing this through and launching this on a pretty aggressive timeline. To be frank, I think that really the only reason why it's possible to be able to do this on this timeline is just because of the fact that we get to leverage all this work that we've already done for a lead series production partner and these other landmark partners to be able to deliver to SAIC as well. And that's how you can see from a product standpoint, the meaning they can have. From a win perspective, yeah, I mean, this is certainly, you could probably say it's the biggest passenger vehicle news, or even just maybe news holistically from a commercial standpoint that we've had past year since the Volvo win there from that perspective, and maybe even for the whole industry at this stage. When it comes to delivery, I think it would be reasonable to expect, though, that SAIC's program would be the first to achieve some level of autonomy, starting on highways, as well as these advanced proactive safety features that would be on the vehicle as well. So we're delivering and executing that to the T, and from a hardware standpoint, and then of course, for, as we mentioned, some of the software components as well.
Well, congrats on that. And then last question. Obviously, there's been several companies, in the LiDAR space, either now publicly traded or intending on going public. Could you remind us, if you feel that anybody gets close to your range or any other performance metric that you can mention, and also the timing? Do you feel that the design win traction you have is really because you were really first, with those LiDARs from a performance standpoint, and able to demonstrate that you were able to ramp this in volume? Just a quick update on the competitive landscape that you see.
Yep. Absolutely. And I think there's really a few different factors to consider. So when it comes to a technology standpoint, as I mentioned, absolutely stand by the statement. It's true, was true, is true, and for any foreseeable future that we see is true, is that we're the first and only system that really meets those performance requirements that are needed to be able to enable autonomy in series production vehicles. And when it comes down to it, there's just so many different stringent performance requirements that you have to be able to get right and do simultaneously. And it's pretty straightforward to ultimately put those specs on a slide, as target specifications. It's an entirely other thing to be able to spend years toiling away, having to build all of these different components from the ground up to be able to solve those problems, and actually be able to do so from a physics perspective. So we really pioneered the only way that we're aware of to actually meet all those performance specifications, while at the same time, having something that can be also, of course, scalable, economical, and auto grade. So from that standpoint, I think there's no question there's also been some level of noise, and always the question is, how do you see the signal through the noise? It's funny, we hear terms like digital LiDAR, 4D, LiDAR on a chip, all these kinds of things. But at the end of the day, we've had those things for some time now, and it's really just a matter of continuing to deliver. From a commercial standpoint, though, to your point, getting the wins is critical, getting that early on, because once you have this, it really is very sticky in the sense that when you win an OEM in the initial program, it's very significant in the sense that it oftentimes will trickle down from that high-end program when you're designed into the platform into multiple other programs, and oftentimes these OEMs have a very long time horizon associated with this. So that's what's really meaningful at the end of the day.
Great, thank you very much.
Our next question comes from the line of Emmanuel Rosner. Please go ahead.
Hi, good afternoon, everybody. It's Emmanuel Rosner from Deutsche Bank. First question would be if you can give a little bit more color around the win with SAIC. Just wanted to double confirm that this is incremental to your $1.3 billion order book, to the extent that it was announced in 2021. And then can you tell us anything about what kind of volumes our brand is expected? Not necessarily the amount of LiDAR should be set, but thinking about sort of like annual production there of vehicle. And then when you were saying this one that's passed towards getting this other sort of like product line, do you mean the rest of the brand, or is there any path toward getting this onto the rest of the SAIC brand portfolio?
So a few different questions embedded there. So first off, yes, that's correct. This is incremental to that 1.3 billion. That was a confirmation that we met the target that we actually raised along the way last year, and now this is on top of that. So when it comes to this and the volume curves, I mean, at the end of the day, our whole focus is around like how do we realize opportunities that can make their way into real production vehicles and see some serious volumes at the end of the day. I don't think SAIC has disclosed their specific volume curve for the R brand. If you can feel free to ask them, is their vehicle. But at the end of the day, what they have also said, and this is really consistent at the end of the day, is that there's a desire to not just have it on the higher end vehicle programs or brands within an OEM, but to also be able to ultimately standardize Luminar across the holistic OEM, and that's really what the holy grail of all of this is to be able to drive towards. But you have to seed it, you have to get designed into the platform first, as part of this, and just take it step by step. So and usually it's everything from the most fundamental part of it is being designed in as an option, on a high-end vehicle, and then scaling that down where you have ultimately standardization across multiple programs. But you have to see that, you have to get designed in, you have to do the R&D work and the significant investment that's required up front.
Understood. And then what can you tell us about the 6 new strategic partners that you mentioned for so far this year?
So it's really a combination. I mean, we talked before about the 3 primary verticals between passenger vehicle, trucking, and robotaxi, as well as there's adjacent markets too. But the product is primarily designed around those first 3. So with that, I can say that we have incremental programs. Again, our focus is really around the opportunities that are going to be able to deliver all the value. It's like an extreme version of the Pareto principle where, you could see, for example, 5% of the programs delivering 95% of the value. And that's why it's just so important to be able to stay focused. These kinds of programs are incredibly intensive to be able to work with. That's why we're establishing this office out in Shanghai, co-located with SAIC, as well as, just to be able to have a general foray into China and be able to facilitate future wins as well. So, that's the story.
So, but just to be clear, the 6 new strategic partnerships, these are essentially new last year?
That is correct. And those are at, generally either anywhere from a validation stage to advanced development and pre-production stage. Those are new companies that we're working with. That's correct. In terms of the production stage announcement and what we have for this large scale opportunity here, and basically what we put together with SAIC, that was one of those 6. But they're at varying stages, of course.
Okay, that makes sense. And then just holistically, can you talk a little bit about in your conversation with automakers, interest level for sort of like rapid deployment of LiDAR and any differences by region? Do you see it's now happening somewhat faster in China, potentially prompted by some of the new EV players that are already coming out with some LiDAR? Is there similar desire in the US or in Europe, or is it maybe on a slightly longer timeline?
Yeah, absolutely. And I think it's ultimately a little bit all over the place and automaker dependent, depending on the vision that's there. But I'd say for pretty much a lot of the forward-looking ones, there's some innate desire to want to have a play. And in fact, in China, there's even some, pressure from a, government and regulatory perspective to be as a holistic mandate to be able to enable these features and capabilities for what autonomy can do, in the really just next few years as part of all of this. And, that's of course where we come into play, uniquely being the only one that can truly enable these kinds of capabilities. So, off to a great start there. But we, continue to expect to be able to, with our existing programs and new programs, be able to win on a global basis. And certain ones are front leaders from an automaker perspective. Certain ones are fast followers. That adopt it after the same kind of technology that the lead ones do. Volvo is historically known for being a lead adopter, for example, as they did with other new types of safety technologies and, all of the stuff of this world. Expect this to be no different.
Great. Thank you so much.
Our next questions come from the line of Itay Michaeli. Please go ahead.
Hi, everybody, and congrats on the first earnings call. Maybe a first one for Tom on just kind of, we think ahead to the original 2025 revenue targets. I think originally you had 4 additional programs reflected in the model. You're targeting 3 additional commercial wins this year. First question, maybe just talk about the level of confidence given that you have greater visibility now around what those potential wins might be on that 2025 outlook, and whether Sentinel should be thought of as a potential upside to that as you begin to market that.
Sure. What I would say is the pace of the commercial activity, both in terms of the discussions that we're having with our existing customers and relationships, as well as the conversion cycle in terms of converting those existing relationships into series production wins, that is happening faster than we were expecting. And so when we kind of look at the guidance that we gave for 2025 last summer as part of our going public process, we look at that, and I would say the pace of activity that we need to be on in order to meet or exceed that, that's actually coming to fruition a lot faster than we were expecting. And so I think that gives us increased confidence in obtaining some of those targets that we've talked about there before. Having Sentinel ready to go is clearly helpful to us getting there. And I think the fact that when you look at what we announced over the last few weeks with a Sentinel win at both Volvo and as well as Psych, that's clearly helpful in getting us to where we want to be in 2025.
Great. Let me just to follow up to that on the funnel. Mm-hmm. So I think 14 advanced development and production opportunities, 50 plus customer partners. Eddie, do you care to maybe estimate by year end of the 50 plus partners, what you might be able to convert into advanced development or the RFQ phase by year end?
Yeah, I haven't really thought about a thoughtful answer to that 50 to 14. What I would say is what we're spending most of our time on is converting those 14 into series production or equivalent wins. What we're seeing is it's more happening naturally that those 50 want to get to the market because as they see the other automakers and their competitors wanting to get to the market, they're kind of naturally, moving down the funnel as we laid out that page in terms of working with us trying to get to the series production stage.
And one important clarification is that ultimately what we're spending most of our time on is we have to execute these programs, right? Like this is a lot of work that's involved to be able to see this through to that series production phase, and that's why with the 4 programs that we were originally talking about, I mean that was kind of the initial appetite that was had and interest, and we actually didn't even plan at all for SAIC or frankly really even the full foray into China. So that is incremental, and part of what we're doing is continuing to invest, continuing to accelerate that, and be able to take on more programs. There's clearly the interest, and we're going big on it. But we want to make sure to not take on too many, such that the last thing you ever want to do is see one of the programs or multiple programs not successfully launched. So that's what we want to keep our focus and keep our eye on the ball.
Absolutely awesome. Maybe last one for you. Going back to slide 9, I think around the data collection that you're now collecting on the lidars on customer vehicles. Are you able to use that data for software development? Maybe talk about the potential advantage you could gain through the data collection through the validation phase. And then on the interesting to see the outperformance of the range. And reflectivity versus prior generation. What led to that? I mean, that just sort of happened during better tuning and testing. And just curious, kind of what led to that upside in the performance metrics.
Yep. So, ultimately, when we set a spec for something, we always try to, under promise and over deliver at the end of the day. But when it comes down to it, I think from an Iris standpoint, the amount of work and just raw engineering that went into every aspect of this, we're on our, in some of these cases, like 7th generation of subcomponent that's gone into Iris over all these different iterations of LiDARs, perfecting it along the way to be able to get to this stage. It's just so much work that's involved. And to be able to do that has now allowed us to be able to up-level even further the capabilities of the device. So when it comes to the data collection side, this is something that's a critical step, from a customer standpoint in their overall deployment, and the key milestone as part of the programs that we are now going through at this stage. From a long-term data perspective, I do think that one often underestimates is just the sheer amount and value of this kind of true 3D data that you can get when in series production. Deploying this with Volvo, with SAIC, with all of these guys. The level of data that you get to utilize has been completely unforeseen to be able to have LiDAR data. The largest fleet of test vehicles out there is like, maybe you have like Waymo at like 500 vehicles, or, some of the different programs in the hundreds of whatever it may be. But the point is that when you have this kind of capability now on tens, hundreds of thousands, millions of vehicles, you can really see a global scale deployment of capabilities and further feature expansion as this scales out. So that's the long-term value.
That's very helpful. Thank you.
Our next question comes from the line of Mr. Michael Filatov. Please go ahead.
Hi, can you hear me?
We can hear you.
Yep.
You there, Michael?
Oh, yeah. Hi, can you hear me?
Yes, we can hear you.
We can.
Okay, great. Sorry about that. This is Michael Filatov from Berenberg. So I just want to go back to the volume question. I guess, you said fundamentally you start off as sort of a high-end luxury option for consumers. And so what I'm wondering is, let's say you assume, our brand is maybe 30,000 units a year next year. What are you assuming for an attach rate, or a take rate from consumers on that sort of high-end luxury option for, including your LiDAR?
Yeah, I think it's impossible to ultimately say what a take rate is, but we have in our own models, we modeled for example, those 4 program wins, and assumed take rates. I think we try to be reasonably conservative when doing that, and then obviously having the huge upside with greater take rates, and then extreme upside with standardization as you progress to that. But maybe Tom, you can provide more details, like what do we have in the models? What do you think is the take rate opportunity?
Sure. So, we have some pretty good data points in the US as well as Europe. When you look at some of the systems out there, whether it's the Tesla full self-driving system, or if you look at some of the other autopilot type versions out there, you can look at that, and if they're priced somewhere in the $7,000 to $10,000 range, you see take rates somewhere in the 30% plus or minus range. And if they're priced somewhere in the $3,000 to $5,000 range, you see some significantly higher take rates. And so we have some data, and then clearly we'll look at what IHS and LMC and other third parties are saying as we kind of assess it. For China, there's less data points that are available to us. And so as we've kind of built out our initial assessment of what the psych forecast would be, both on a year-by-year basis, as well as what we're eventually going to include in our backlog when we update it again, we're being conservative with the take rates in the early part of the year. And then the other interesting thing that Psych mentioned in their press release is ultimately their plan is to introduce this and hopefully make it standard, not only on the RTEC, but potentially other Psych local brands as well.
And the important distinction here, by the way, too, in terms of what's being compared to, that maybe has like that 30% take rate at very high prices, like the Tesla full self-driving system, the other kinds of systems out there, that are powered by Mobileye or whatever it may be. Those are level 2 ADAS systems where you have to keep your hands on the wheel, eyes on the road, constantly ahead. This is a true autonomous, capability of level 3 to 4 on highways starting out, as well as these advanced safety features. They can also be produced at frankly, lower ASPs than what people are even asking for today. So that's why, even if we're low double digits in, from expectation or modeling perspective in terms of what we have to be conservative, hopefully it's as it emerges and as it scales, and over time that take rate grows dramatically and ultimately reaches 100%.
Understood. Yeah. And so I guess what I'm trying to get here, ultimately is, at what price point for the Luminar product or LiDAR do you think, you start to scale into sort of more high volume platforms, right? Some have said a couple $100. I guess what are you guys baking in from a cost curve decline, right? And sort of an attach rate trade-off there, sort of in the out years to hit your targets?
Yeah. It's a good question as part of this, and I'd almost say that when it comes to this, it's really less about even the unit economics of look at the bump, maybe incrementally you'll have more units out there, more programs. I think the general when you can it just a lot of sense from a pure value perspective. But you have to start somewhere with programs. Right? If you take into every room all at the same time simultaneously, you probably not be super successful. So even with the resources we have the product, so it just takes time to be able to work through this. But when it comes down to it, really. As it was mentioned, people are charging well into the single-digit thousands, oftentimes for these basic assisted driving systems like level 2. With it's basically a lane keep assist attached to automated cruise control. That's really all it is at the end of the day. This is a completely different level of capability where you can take your hands off, eyes off, on the highways, read a book, use your phone, watch a movie, work on your laptop, take a nap, that kind of thing, in terms of what it's ultimately capable of here. And in addition, of course, these proactive safety features of dramatically improving vehicle safety, helping, eliminate some of the 1.3 million lives lost on the road every year. And we even talked about some of the second order insurance implications, that we may be able to actually, in part or full capture as part of all of this. So all of those factors coming into play, I think the business case is actually there today for standardization across the rest of the industry, for at least in our case for what we have. But that doesn't change the fact that, we can have all the dominoes set up, you still have to execute along the way. And this is what we're just so focused on, being able to see this through, and, kicking off. I mean, just as this year has been so, 2020 was so pivotal, this year is incredibly pivotal. And then next year at, SOP is definitely going to be a continued watershed moment.
Awesome, I appreciate it. One more quick one. What is the power consumption on the Iris? I know you've released it for the Hydra. Can you disclose that?
Yeah, I think we had it at like, it was like it depends on the conditions, but it was like plus or minus 20 watts or so. So when it comes down to it, I think the important part is that you really have a product that can meet all these different auto grade qualifications. And for example, from a power standpoint, the important part is that you need to make sure that you can actually meet these temperature ranges going from -40°C all the way up to really hot conditions like whether you're in Siberia or whether you're in Death Valley. This is the kind of conditions that automakers require for you to be able to operate in. And that's where we've been able to pass those tests, as part of the critical phase. I mean, this is a very intensive process of industrializing Iris to get through that. And we're really the first to be able to do that with this kind of product that's built for the autonomous space and industry, and able to enable some of these capabilities that we're talking about. So that's what we've been able to do.
I appreciate it. Thank you very much.
Operator, why don't we go ahead and hand it off, final question to Joe's back, and then we'll go ahead and conclude here. I know we started a few minutes late, so we'll run over here a couple of minutes.
All right, Mr. Joseph's back, please go ahead.
Thanks very much for squeezing me in. Good afternoon. Just to go back to the SAIC announcement, I just want to be clear. I know it has components of Sentinel software system, but it does not have what you're doing with Zenseact, right? And that's not going to be a requirement that automakers necessarily take it with Zenseact software. I just want to confirm that.
Yeah, we're not requiring automakers to be able to take every component of Sentinel. In this case, it includes other software components as part of it. Initially, this specific deal does not include the Zenseact component as part of this. Given we also just finalized that last week. So we're working through it, but there's obviously great opportunities ahead. What the Zenseact component allows us to be able to do is expand to even more automakers, such that, like, particularly ones that really don't have anything when it comes to the autonomous space. That's when you have the controls, planning, actuation, decision-making part of this stack, which takes a huge amount of work to develop. I mean, in their case, it's 500 plus experts, that have been working through this. That's what's just so significant is having that license and having the ability to now, as part of the plan, is something that actually allows everybody to ultimately be competitive and not a commoditized automaker. And as part of that, also move towards the mission. And this is a big part of Volvo's vision as well. Is like how kind of seeing just minimums of vehicles as from a safety standpoint. So. It's a great partnership all around, and we've also, of course, though, productized all of this software work that we've been doing to date, and have been successful with that as well.
So, does leveraging that Zenseact software for part of the stack that's available for certain automakers, does that at all meaningfully change your internal R&D? Like, is that something you otherwise would have had to develop, or it's sort of on the margin? It's not overly meaningful.
Yeah, I'd say there's no question that it saves. I mean, it's all just a question of what's the TAM that you're also addressing as part of this. Like, if it's just the LiDAR, we know what the constraints are with this, but having this full stack system can triple your TAM as part of what's actually addressable, and that's really important because and without any software at all, it's maybe even just a small fraction of the total market in terms of what's feasible to address. But having this portion is definitely there. And it's an investment that we would have realistically, given just all the success we've had, otherwise made as part of this, and was kind of some of the thinking. But at the same time, you could say this saves hundreds of millions, heck, maybe even over the long term, billions of dollars as part of this, but of aggregate investment. But at the same time, going all in with this, it still does require some kind of non-trivial investment. If you want to go big and go through with this, there's still a significant development cycle that has to take place, and we're responsible for also doing the work to be able to work with the different OEMs and integrate the solution. And we catalyzed this by actually earlier on, and all the puzzle pieces have fallen into place. You may recall we did an acqui-hire in Munich of a previous Samsung ADAS team that had deep experience, with a number of the German OEs and integrating systems there. So those are the same people that are actually now working on Sentinel with the Zenseact team. So that gives you a little bit of perspective, but otherwise, yeah, we're all in and look forward to seeing the continued success with it.
Okay, and then maybe just a very big picture. Like, I know you mentioned earlier about how your system is much different from level 2 systems out there today. I agree. But there's also been a bunch of press recently about a bunch of level 2 crashes and maybe some of the nomenclature around that. Are you at all worried that could impact autonomous adoption?
It's a great question, and I think the only reason why there's any association with autonomous and those kinds of crashes is just because sometimes people call those features autonomous. The reality is that they're not autonomous at all. These are purely assisted driving systems that are sometimes can be used in some capacities as if they're autonomous, and then that's when those things happen. So in some, and not to doesn't make it morbid in any capacity, but in some weird way, it actually, enhances the visibility and the use case behind why this stuff is just so important to be able to do and to be able to get right and to actually enable true autonomous capabilities. So, there's it doesn't change it. In fact, it realistically only enhances the case as part of all of this. But again, what we're doing here is a totally different capability. It's the difference between having some basic level of sensing to be able to understand what's going on around you and be able to help guide you between a couple lanes with an auto steer or an automatic cruise control. This is the whole point in terms of what this level and accuracy of data can actually allow you to take your hands off and eyes off, ultimately, as well as just from a basic safety perspective, actually start proactively preventing accidents, which really hasn't been, like, everything right now is just reactive, and people still die on roads today all the time, and tens of millions of crashes as well, and injuries associated with these things. So that's what we have ahead of us there, and it's going to make a huge difference holistically on those fronts.
Thank you very much.
Our last question comes from the line of Mr. Gus Richards. Please go ahead.
Yes, thanks for squeezing me in. Just can you give us a sense of what the revenue differences between per unit when you have full stack software plus the sensor and perception software versus just the sensor?
Yep. So from a total vehicle content value perspective, and I think Tom shared some of the details before around the thinking around this is that for highway autonomy, generally about $2,500 worth of addressable content on a vehicle on average. For proactive safety, on the order of $1,000 of addressable content value on a vehicle on average, and that kind of gives you a general sense of this, and still allows profit margins for non-trivial nature for the OEMs as well. So when it comes down to it, our goal is obviously being able to make sure that we can, one, actually make it possible to be able to have these capabilities and make that addressable in the first place. But second is to be able to get the largest slice of that pie there. And in some cases, it may be the whole thing. In some cases, it may be 75% of it. In some cases, it may be 25% of it. But usually more than that. So that's a dynamic model that we have as part of the holistic Sentinel offering.
And then in terms of Sentinel versus Mobileye, is it complementary? Is it competitive? And there's been a lot of questions about how sticky your work with Mobileye on the robotaxi is ultimately going to be. If you could address that as well, that'd be helpful.
Yep. And I mentioned, I think that the thing is with all of these different programs, I mean, there's a reason why this time right now is so pivotal of getting designed into these different programs. But at the same time, of course, there's no question companies see the value of just how critical and fundamental this is, to this entire industry and as a catalyst for everything going forward and the kind of ASPs that you have. This is not a $40 camera that we're selling on a vehicle. There's serious content value and serious margins to be had as part of this. So when it comes down to it, the important part here is that the correct answer is ultimately no. We don't really compete with, frankly. I mean, you brought up the name Mobileye, but we don't really compete with any of those guys when it comes to an autonomous vehicle standpoint. And it's a little bit hard to think of. It's like, okay, well, when you say you're making this transition or have made this transition from a LiDAR company to this, autonomous vehicle company from a full stack standpoint, does that mean you're competing with Waymo, Cruise, Mobileye, Aurora, whatever it may be? And the answer is actually no, not at all. Again, what we are very, very focused on is not the robotaxi market for this. And that doesn't mean that we won't work with those companies and we sell into those companies, and that's totally fine. It's a model that we support for any foreseeable future as part of this, which is great. But when it comes to the actual production vehicle market, there's really nothing there that actually supports this. I mean, from a software standpoint, that's why we've been so intent on developing this and seeing this through, and when it comes to passenger cars, as well as trucks for that matter as well, which is often an overlooked area for this. So that's where the Zenseact team comes into play. That's where all this, again, we're focused on production hardware, production software. This is not an R&D vehicle, that's at a test stage with a supercomputer in the trunk. This is something that's actually capable of being put onto these vehicles, and that's why it's just, so far advanced when it comes to all of these things. So, and why it's so meaningful.
Okay, and then just in terms of the stickiness, once you're designed into one of these, how difficult is it to just switch sensors?
It's really just a question of to what lengths. I mean, the reality is that there are a lot of fundamental dependencies that happen, when you work with different companies, when you integrate the software on top of the hardware and do the different data collection aspects of all this. It's effectively impossible to just, one-to-one swap out a sensor from another sensor that's already designed in. That's not to say that you can never do things. You can rewrite your code base, recollect all the things all over again. Take years worth of work and possibly not even practical or economical. I mean, at the end of the day, the platform design side, lifetime, different OEMs, like I mentioned, is on the order of generally like 7 years. With these things, with a few year lead up, oftentimes, where it's just so important to be able to get designed in the platform early on, start working with these companies and these things. And at the end of the day, though, I don't really see this as a this is not like a primary mode of defense, so to say, for us. Like we have the technology that actually solves the problem. Like we have that today. Like there's really no dramatic incremental benefit. Like if you wanted to displace something, you would have to have something that actually also meets the specs like we do in terms of what's required, but at the same time does so with a validated product that's already proven out, that has the economies of scale, which is a little bit of a chicken and the egg problem. And when we already get the eggs, makes a difference. So on top of that, we have the data, we have all of this other stuff. So that's why it's, I mean, not that we're worried from a technology perspective either. We have, again, the only way from a physics standpoint we're aware of this, as well as the largest patent portfolio in the industry. It's pretty much more than all the other major players combined. So, I think that's kind of how we think about the problem.
I got it. Thank you. That was very helpful.
Outstanding. Well, on behalf of Luminar, we'd like to thank our tremendously supportive investor base, as well as the analyst community, for joining us today. And with that, we can conclude our inaugural business update call. Thank you very much.
All right. So I'm going to take some time to rewatch that later on today and tomorrow, kind of, absorb it again, really gather an opinion on how it went. I thought it went, decently well. I just want to do a quick speed round over here. One, thank you all for tuning in. Sorry for any buffering problems. I live stream from the office every day, and today is the day that they're working on the building Wi-Fi. So it's been buffering all day. Nothing I can really do about it. I apologize. I've had this planned for a month. Unfortunate timing. I want to do a speed round, though. We got a lot of great questions in there. I wanted to take 5 to 10 minutes to just address them. I'll also show you guys where you can go if you want to access all of my notes and due diligence on a lot of the SPACs we talked about in the chat, a lot of public companies based on their earnings reports also. It's all free. I host it on my website for y'all. It's free right now. If you sign up, you're never going to have to pay. Because I will, as we get more users on here, I'm going to have to upgrade my servers, and then I'll, charge any new users at that point. So you're going to go to the bottom of my website, growthsaloon.com, go here, you'll make an account, log in, and then it's going to take you to my den of due diligence. So you're going to have public companies, SPACs, we talked about a few of them in there as well. I'll let you guys check it out, though, but it's pretty cool. I think you'll like it. You can sort it by any of this. You can see pretty much everything you would want to know about pre-merger SPACs, with their targets at least, and yeah, just click on that to see all the information. So, I'm not an investor or professional investor, not a financial advisor, I'm an online marketer. I've been in entrepreneurship for 5 years now, which is where I got my exposure to people like Peter Thiel, people like Chamath Palihapitiya. So one, Kia, you made a great point in the beginning. You don't want to just tail these guys. They're going to cast a wide net, they're going to hit something, and they're going to miss something. That's the name of the game. I'll do the same too. So you want to be very particular on what you're investing in. For example, with Chamath, I'm heavily invested in Open Door. That's one of my 3 positions in the market currently. Like I said, I only do 5 to 10 at a time just because I really try to dive in deep and be like a co-owner or a board member of these companies when I invest. So using a lot of the same principles that they did when they would invest in our company. So I spent 3 years in the beginning starting a company that raised just under $1 million in funding. Not a ton of money, but definitely something. So I use a lot of those same principles that I learned from private equity, angel investors, venture capitalists, etc. In my investment. So I'm heavily invested in Open Door, for example, Chamath, but at the same time, I never got into Clover because I didn't think it was a good company. And you're seeing what's happening with Clover. Chamath is missing a Clover right now. I think even you would that. I'm not just going to be successful, but yeah, I agree with you completely. I think this is going to be a very solid company. I think it already is a very solid company because it's been being developed for over 9 years at this point, since 2012 when Austin was at Stanford. That's when Peter Thiel became invested. You see what his network and what the PayPal Mafia network does for a company. They've got over 50 major OEM contracts already, at $1.4 billion in their order book. That creates an intrinsic value relative to value investment. So this is the most forward-looking company I'm in. But they've got the existing relationships, they got the existing partnerships, the existing deals, to where I know the money's going to be there in the future, if not more money. Is this a good time to buy in? I don't try to time the market. You mentioned the same thing with MP Materials, what you're trying to do there, Kia. I can't time the market. I've tried before, and no one can really time the market that well. I get what you're trying to do, but the best day for Bitcoin, for example, people always say the best day to buy Bitcoin was yesterday. The second best day is today. I don't care, what the price is today. Most of the time, if I find a really good company, I'll buy it because it's going to be worth way more than I paid for it 5 to 10 years from now. The importance of Austin being a good CEO. I've got like 5 bullet points I want to rush through here because I do have a buddy waiting on me. So the importance of Austin being a great CEO, Kia, is when we were trying to raise money for that first company I helped start. What the pushback we would get was that they wanted an A plus team, or I'm sorry, they didn't want the A plus idea with the C plus D plus team. They wanted the A plus team with the C plus D plus idea. So it doesn't have to be some brand new world changing idea. If you have a great experienced team, a very intelligent leader as well, and a good leader, you want to bet on those guys. Those are the ones who are driving your investment ship forward. So that's why we would miss out on a lot of opportunities because we were young at the time. We were in college. We weren't an A plus team. We had an A plus idea, but we had a C plus D plus team, and ultimately, wouldn't have been a smart investment. Looking back now, if I was an investor. So that's why it's so important that Austin, is a very intelligent CEO that someone, like Peter Thiel will back wholeheartedly for over 9 years now. I think our ship is in good hands. So, Austin's a great CEO. Can't follow every pick. Laser is a good time to buy. If you think it's a great company, buy it whenever. I told you I got in at 1050. So I'm already up over 200% on it. I was up well over 300%, but I'm not looking to sell. A lot of our earnings are going to happen in 2022 and 2023. We know that looking forward. I don't know if that's priced in. I'll do a little write-up on it later today. Hopefully I'll publish something by the end of this week. But I am super swamped as well. But yeah, I think it's a great buy. Fave SPACs, I'm in 3. I'd like to be in more, but I really do a deep dive of research before I ever invest in a single company. I don't FOMO. So the 3 I'm in right now are Open Door. I got in there around $10 also. My average, because I've averaged up along the way, is like $16, but I'm in the warrants there. So I'm up a lot on that. Laser is another SPAC I'm in. RMGB is my most recent one. That was the first company I've added to my portfolio in 6 months. RMGB is merging with Renew Power, the #1 renewable energy company in India, who's already doing $700 million of revenue a year. So I don't have to look forward. It exists there. There's a lot of intrinsic value in the company. I love value investing, so that's in my portfolio for that reason. And then besides that, I'm in cryptocurrency, but specifically just Bitcoin, Ethereum, and VeChain. MP Materials is a company I really do want to get in. Everyone's super obsessed with the EV sector right now. The name of the game is following the supply chain, right? As to what path we think it's going to take. Because you're going to get opportunities that way before anybody else does. So the name of the game here is, everyone likes EVs. Well, what's next? Well, all these EVs are going to need to be charged somehow, right? So we're going States now that mines those materials. So they have a competitor all of a sudden. You might be able to get in there around $10. I don't think it's moved much. So, dive into my, down due diligence. I live stream every day for 2-3 hours doing due diligence on public companies, on SPAC mergers before it blows up on Reddit, so that I can get in around $10. And I'm sitting here on this investor call thinking I'm sitting at $30 a share. Things are looking great. I didn't wait to hear about it on Reddit. I didn't wait to hear about it, so much later that I didn't get in, and I'm down, not a knock on you, Kia. I have my positions like that as well, but down 3%, I'm up 200% because I got in early enough. So join us. Yeah, I'm getting.
I thought it was just my computer because I was on Wi-Fi, but it's not.
Yeah, I don't know what's going on with our Wi-Fi here, but I'm gonna log it off.
Just let them know.
All right, I unfortunately can't continue this conversation just because our Wi-Fi is so bad. I understand now that the audio is absolutely awful at this point. So a lot of what I'm saying is going to be, for nothing, essentially. I don't know what's going on with our Wi-Fi today. But yeah, the name of the game for me is always finding these companies before Reddit starts talking about them, and just knowing how to find a great company, one that is forward-looking, but not too forward-looking. I don't want a part of any of those space companies right now because they're all pre-revenue. I want companies that make money today because they're going to be around after a market crash. They can survive if their financials are good and they're bringing money in. The most forward-looking company I have is Laser. Other than that, though, I'm spending 2-3 hours a day live streaming, finding new companies before anyone else does, and those are all the companies you see in here, with a lot of due diligence on them. Like, for example, look at, trying to see which ones I've added recently. Black Sky was SFTW. Renew Power was one that I'm holding right now. So you can see all the due diligence we do. We got their competitors, you've got their total addressable market, you've got their compound annual growth rate, you've got their projections. Is it believable? Is it super aggressive? Is it conservative? You've got their enterprise value, their equity value. All these are updated automatically, price-wise, market cap-wise. You've got their post-merger adjusted market cap. That's going to be calculated based on what percent of the company we're getting in the deal. I'm looking at the deals and SPACs. There's a lot of great companies in there. In the SPAC world right now that I want no part of because we're getting god-awful deals on them. So I'm very, very picky on companies I add to my portfolio, but if I had to give you 4 SPACs right now that I really, really like, and I can't give you financial advice because I'm not a financial advisor, I'm an online marketer. My dad's a financial advisor, but that does not help us because, one, I'm not a financial advisor. 4 SPACs that I really like right now, though. Open Door still. That's the most bullish on that one, I'd say. Laser, RMGB,